Now, while bank stocks have surged, there's another group of financial shares that have also rebounded, non-bank financial companies. Here with his outlook for banks and non-bank financial companies is Anton Schutz of Menden Capital Advisors. Anton, welcome to the program. Good to have you with us.
Happy to be with you.
So, Anton, give us the lowdown on what's going on in the banking industry right now. I mean, should people be actually going out and allocating new capital to bank stocks in general?
Well, you know, the interesting thing is the industry's had a huge run off of the bottom in March, but we're nowhere close to where valuations were before the crisis started, nor are we close to a fair valuation on peak earnings. So do you want to chase the rally? You should have your foot in the water. I think, you know, a pullback's always healthy, but there's still a lot of upside in many of these names if you have a longer-term horizon.
All right, well, let's talk about some of the companies, some of the bank companies. I know that you've just recently been visiting. You were down in Tennessee. You visited First Horizon National. Give us an update of what's going on there. They were one of the first to get into trouble.
Absolutely. They got into trouble by getting away from their knitting. They got into national lending, construction lending, home equity. And, you know, fortunately, they saw the error of their ways, and they raised capital early. They brought in a new management team. You know, I think Brian Jordan is definitely one of the best guys in the business today as a CEO. He came out of Regions and, you know, has really put a lot of work and hard effort here into identifying what's good and bad. And I think that they built the reserves so early, they're going to be one of the first guys to actually start bringing reserve levels down as the bad assets are running off the books.
Now, the stock right now is trading at around $13.61 on the close. The stock is up about 35% so far this year. Is still room to purchase shares of First Horizon?
Absolutely. I, you know, certainly like this name. And, you know, what's interesting is a company like this that gets it, that's cleaned up, that has enough capital, will probably be one of the companies that can buy other troubled institutions at very favorable prices. For instance, that BB&T deal for Colonial was very good for BB&T stock and their earnings potential. And I think First Horizon, probably late this year, maybe early next year, may get a deal or two under its belt as well. And I think it can really grow earnings out of that.
All right, well, when you talk about banks buying other banks, that reminds me of a company you've spoken about in the past, and this is what? People's United Financial, used to be People's Bank in Connecticut. They have a lot of cash. Are they going to spend any of it? Are they going to go on the acquisition trail?
Well, they're definitely on the trail, and they've kicked a lot of tires, and they've kissed a lot of toads. But, you know, they really don't want to overpay. And I think if they get a transaction within their footprint or contiguous to their footprint that makes sense, they'll be looking at it. And they definitely want to pay the right price. They're very disciplined. And they have a lot of geographies they can look at. And I think they would even look outside of geography if it was strategic enough from a financial perspective, that attractive. Because with $2.8 billion of excess capital, they can buy a whole lot of bank. And I think the FDIC certainly has them very high on the list as a preferred buyer.
Well, that's our next question to you. Is the FDIC probably is going to have a pretty big list of banks that they're going to want to sell? Are they going to be selling them at prices that make sense for a PBCT, for example?
Indeed. There's no doubt that the banks are getting, you know, pretty reasonable deals. The FDIC certainly doesn't want to staff up even more to take over every one of those little banks and try to run it. So it makes a lot of sense to dispose of them quickly. And the loss-sharing deal they worked out with BB&T made sense for the FDIC and for BB&T. So I think everybody shares in the gains. Obviously, the shareholders of the existing banks get wiped out, but, you know, the buyers and the FDIC certainly have a chance to profit, you know, in the long run from getting these transactions done right.
Anton, what about the issue of having non-bank acquirers take over banks, whether it's private equity funds or even hedge fund money? Is that something that you think is going to actually start happening in any large size?
Well, we've certainly had the Bank United transaction, and we've had IndyMac. But I think the FDIC really doesn't want to hand the profits away from itself or from the banks it regulates. So I think its standards have been tougher. They've talked about bringing them in a little bit for private equity. There's no doubt that more capital in this space is better than less. And, you know, we have to try to create somewhat of a level playing field. Clearly, we want to help the banking industry out. I mean, there's no doubt about that. But private equity needs to have a seat at the table here. Their ratios they have to put in have to be reasonable. And quite frankly, I'm not sure why they need to wait 3 years to record a profit by selling a company. I mean, this is still a capitalist nation as far as I'm concerned. And, you know, I wish if they made money and they wanted to sell it, God bless them. but we could certainly use their capital.
All right, we're going to continue the conversation. We've got more with Anton Schutz of Menden Capital Advisors. We're going to talk about companies that can actually make more acquisitions and also talk about the fate of small and regional banks. More with Anton Schutz of Menden Capital Advisors. This is Taking Stock on Bloomberg. This is Taking Stock on Bloomberg. I'm Pim Fox. We've talked about some of the banks that Anton Schutz of Menden Capital Advisors has been buying, whether it's First Horizon or People's United. But what about some of the companies that are going to make acquisitions? Anton, tell us about a company, Invesco. You think that they might be poised to actually be buyers, correct?
Well, they're actually buyers of securities, and they're buyers of broken securities. They really focus very much so on the residential mortgage-backed space right now, and I think they'll be a big beneficiary of either prepayments happening or the PPIP. They're one of the managers, and Wilbur Ross is also involved with this entity right now. And what's interesting is eventually commercial real estate securities may well be part of this investment portfolio as well. So I think they can invest in a slightly broader asset class than one of my favorites, Chimera, which I still own, but this is very interesting. They've put their money to work. The dividends will probably be starting to come in the next quarter or two, and they'll be pretty attractive. But I also think they can get some capital gains by buying some of these securities at really great prices.
All right, let's talk about another one. You've got Capital Acquisition. Now, this was set up as a blank check company, right? This is to actually go out and buy, what, mortgage assets, specialty finance assets, loans, things of that sort?
Exactly. Again, they'll be buying some of the same assets that a Chimera buys or that an Invesco is going to buy. But, again, much like Invesco, this thing trades very close to book value, which allows you, to some extent, to have new money, not legacy assets, and also, the ability to take advantage of some of the pricing. Some of the companies which I still like a Redwood, trades at a price-to-book multiple of sort of 1.6, 1.5, and, here's a company trading at book with just cash. And I think there's an opportunity to put that cash to work with a very good manager that they've selected.
Anton, all these sort of non-bank finance companies, did they do well because the banks, the banks just don't want any of these assets or don't have the money to actually go out and buy them? They're not in that business anymore?
Well, I think it's a combination of both. I think there's no doubt there's still a lack of liquidity. I know the PPIP is designed to help, increase liquidity, but there's still, many of these assets that are performing reasonably well, trading at very distressed prices. So the opportunity still is out there. The banks, either one, aren't putting new assets like this on the books, or two, in some cases the regulators are saying, hey, you have this stuff, get rid of it, clean your balance sheet. And, if the banks are certainly carrying it at the right level, it makes it an easy transition for them to sell it.
When you take a look at the regional and small banks, are they in the worst position right now? Do they need more help?
Well, a lot of capital has been raised at the big, and money's starting to be raised at the small, but there's a lot more money to be raised at the small. So, I think it's good for some of the boutiques out there in raising capital. And I think you've seen Keefe Bruyette and Sandler O'Neill certainly raise a bunch of capital. But you're also seeing some of the bigger bulge brackets getting down and raising capital for these smaller banks.
All right. I want to thank you very much. Anton Schutz coming in from Menden Capital Advisors, sharing his thoughts on banks and non-bank financial stocks.